Welcome back. With Bullard signaling a rate hike could be coming sooner than everybody thinks. Bitcoin is in the red along with the rest of the market and with gold and all the inflation hedges. So with the debate raging between inflation and deflation and tapering versus holding steady, where does Bitcoin land in all of this? Mackenzie Sigalos is here now to discuss. Mackenzie, what are the bulls saying about it this week?
Hey, Kelly. So, some investors see Bitcoin as more of a vote of no confidence on Fed policy, but historically, Bitcoin hasn't responded all that well to inflation news or inflation surprises. And this is why a lot of people on the street are dismissive of Bitcoin as an inflation hedge. And if you look at the numbers, I would be too. Generally, it's thought of as a longer-term opt-out, essentially a choice to not be exposed to Fed policy, period. Kelly?
Okay, so, and I know what you're saying, and obviously people on the street go, okay, we look at the correlations, they're not that high. It's more highly correlated to stocks and so forth. But I still hear plenty of the public who's holding Bitcoin as a hedge basically against sort of the big collapse, right? That between the government and the Fed, and they're going to get this wrong. The dollar's value is going to slide. Again, that's the opposite of what's happening this week. And Bitcoin is what you want to be holding. So have any kind of planks of that argument been knocked away this week?
No, you're absolutely right. And that's the long-term play. So what we're seeing right now are inflationary shocks, but we're not yet in a 1940s or 70s style situation where inflation is genuinely ruinous and we're actually dealing with monetary repression. And that is what would be the true bull case for Bitcoin when real interest rates go to -5, -10 through a combination of high inflation and the government engaging yield curve control. And that's what the more macro-focused Bitcoiners are looking for, that scenario. And obviously, we're not there yet.
All right, Mackenzie, since you're here, we're also curious about how this is playing out across the country in terms of the interest in Bitcoin as an asset class and mining Bitcoin. There was big news this week about Texas trying to court a lot of these miners, which is ironic because they're traditionally home to the energy industry. Now, of course, we're looking to energy maybe to power Bitcoin mining. The Miami as well, right? There's a lot of competition even as we debate the price.
Right. So I'm actually in Miami right now, and I spoke to the mayor yesterday. And what I wanted to get from him was a sense of why they're trying to court these Bitcoin miners. And, more than half of the world's Bitcoin miners are in China, and they're essentially being kicked out, and they need to find a destination. So you have places like Florida and Texas trying to court these migrant miners. And Miami is known for its, relatively cheap, relatively clean nuclear power. And so he's trying to draw in those miners as part of a larger play to be a crypto hub in the U.S. And as you said, Texas is also rolling out the red carpet for some of these miners looking for a home.
Yeah, I know that states obviously always looking kind of for the next big thing, but especially if you're Texas and you feel like it might be an existential threat, the way that people are moving away from oil and gas, you'd say, yeah, they probably might have a little bit more on the line in trying to cater this new industry. Mackenzie, thanks. Mackenzie Sigalos in Miami reporting on Bitcoin for us.
Shepard Smith here. Thanks for watching CNBC on YouTube.